$60 billion wiped off the local share market after a surge in inflation in the US and fears that the world's largest economy will go into recession. Canva's plan to take on Google and Microsoft, and the names missing from the invite list to Queen Elizabeth II's funeral. It's Thursday, the 15th of September 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, you've been back a couple of days. Have you caught up on everything from the Queen's funeral and the pomp and ceremony there through to amazing 48 hours in markets, really?
What an extraordinary time to come back just as this enormous volatility hits markets. And so it's just been the last kind of 24 hours in particular have just been extraordinary. So we've got plenty to talk about today.
We sure do. Let's get into it.
All right. And you've got a good chat today coming up with Victor Windia, who is the portfolio manager for the Australian Unity Future of Healthcare Fund. And it's really all about investing in very particular stocks, basically in the healthcare sector.
That's right. I mean, it's a very timely chat because healthcare is often seen as a defensive sector of the market, but that's a bit unfair on it because it has some really high risk companies, and it's got some very steady companies, kind of from CSL and ResMed through to biotechs. A great chat with Victor. He's a big fan of the sector, and he also gives us a few stock tips as well.
Yeah, as you say, a very timely chat because the main story this morning is all about markets. About $60 billion was wiped off the local share market yesterday after a huge tumble on Wall Street. And the dollar was savaged as well, dropping sharply while bond markets were also sold off. Really, it was everywhere, wasn't it?
It sure was. It wasn't a good day to be an investor. Actually, well, with falls comes opportunity, so maybe I should temper that a little bit.
Yeah, perhaps.
First to the numbers. The S&P ASX 200 fell 182 points, or 2.6%, to 6,829 points yesterday, with every sector falling. Yes, Michael, there was a sea of red ink.
One of your favourite lines, but today seems very, very appropriate.
It is. The banks were hammered. Commonwealth Bank, National Australia Bank and Macquarie Group all closed down more than 3%. Property leader Goodman Group tumbled 5%. Mostly real estate investment trusts don't like it when interest rates rise. Wesfarmers was off more than 4%, and a bunch of disparate stocks, Transurban, Coles, Aristocrat Leisure and WiseTech Global, 4 different sectors there, they all fell more than 3%. In fact, only 3 of the top 50 stocks, minus South 32, Computer Share and healthcare group ResMed, rose yesterday. A rout, I'd say.
Yeah, I think that's fair. So let's rewind just slightly. What caused this? Why the slump?
Wall Street. Simple as that. Monthly inflation figures in the US released on Tuesday night Australian time show that headline prices in the world's largest economy rose by 8.3% in the 12 months to the end of August. That was bad enough. But what really spooked markets was that underlying inflation, the one that's supposed to be a better measure of ongoing price rises and take out all the volatile items, jumped 0.6% last month, taking the annual rate to 6.1%, much higher than people thought. That triggered fears of big interest rate hikes in the US and, if that happens, potentially a recession. It sent the Dow Jones Industrial Average, which measures the performance of the top 30 stocks, down nearly 4%. It was the worst day for the Dow since June 2020. The broader-based S&P 500 fell 4.3%, and the tech-heavy NASDAQ tumbled 5.2%. That was its worst day since March 2020. The mood wasn't improved last night by inflation figures out of the United Kingdom that showed for the 12 months to the end of August, inflation came in at 9.9%, high, but slightly down from a month earlier. But core inflation rose to 6.3%. So, plenty going on.
Yeah, certainly is all around the world. But bringing it back home, locally, what does it mean for interest rates here?
Good question. The news out of the US on inflation has convinced some local economists that the Reserve Bank won't risk being left behind on interest rates again. The central bank was behind the curve earlier this year, triggering a torrent of criticism and a run of big rate hikes. Now, Nomura strategist Andrew Ticehurst expects another 50 basis point increase when the Reserve Bank board meets next month. Remember, 48 hours ago, the debate was whether the local central bank would move at all at its next meeting. So, the upshot of all of this turmoil is that it is putting more pressure on the Reserve Bank to lift interest rates.
Just one more question for you, Sean. How widespread was it? Were all international markets sold off?
Basically, all equity markets sold off following Wall Street, and many currencies were hit really hard too. The Aussie dollar fell more than 2% in its biggest daily tumble since COVID. It went from about 69.2 US cents. It had done quite well back to 67.4 US cents. In times of trouble and uncertainty, investors run for the US dollar, and the Aussie dollar, along with other currencies, became collateral damage. Treasuries were sold off. Why? When rates are rising, it's less attractive to buy a fixed rate bond, knowing that in a month or two, you might get a higher fixed rate. The trick for investors, of course, is knowing when to get back into the bond market, given yields are rising. Still, the sell-off went on. It's been quite a 48 hours.
Yeah, that seems like something of an understatement. We will be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese takes off for London this evening, and on the plane will be senior leaders from Papua New Guinea, Tuvalu and Samoa. The Governor-General of Solomon Islands will also be on the plane, but not the Prime Minister.
Yes, Manasseh Sogavare has clashed with both Anthony Albanese and his predecessor Scott Morrison, and he has been offered a lift, but he doesn't want one. Australia extended invitations to the leaders of 10 Pacific Island countries with ties to the Commonwealth to come and join the flight. There will be dozens of global leaders at Queen Elizabeth's funeral, including US President Joe Biden. Away from what's happening around funeral arrangements, Mr. Albanese yesterday made a veiled swipe at the growing friendship between China's Premier Xi Jinping and Russia's Vladimir Putin, saying that when it came to Russia, international leaders had an obligation to uphold international law.
All right, Sean, business failures are surging now as rising costs and a tax office crackdown on unpaid debts puts pressure on companies in the struggling construction and manufacturing sectors mostly.
New figures from the corporate regulator show that the ending of pandemic-era support packages has triggered a surge in uneconomic companies. Insolvency rates have now jumped back above pre-COVID levels. Remember, at the beginning of COVID, we expected plenty of insolvencies. It just never happened. Suddenly, they're hitting. Company failures hit a 2.5-year high in July, as 717 firms entered into administration. According to the Australian Securities and Investments Commission, it's more than double the lows of 2020 and 2021, according to a report in the Financial Review. The sector hit hardest is construction, where supply shortages and high material costs have hurt builders. Manufacturing administrations also rose sharply in July, with many East Coast companies hit hard by much higher energy prices.
All right, now we love talking about Canva here because it's just great to see an Australian company doing well. And it's now taking on Microsoft and Google directly as it pushes to become one of the world's largest tech companies.
That's right. Canva unveiled its new product range yesterday. Now, it included a suite of office productivity software called Canva Docs, an interactive document tool to rival Google Docs, Canva Websites, which is a website builder to rival Squarespace, and Whiteboards, a drop-and-drag brainstorming tool to rival Miro. There's also an app marketplace, which features a Canva API and developer marketplace, where developers can build Canva integrations, as well as a creator marketplace, where local designers can get paid for contributing designs to the library. Canva wants to push into bigger businesses, according to a report in the Fin Review, and its new visual work suite aims to help larger teams collaborate and work in a cloud-based environment. Much of its success so far has been in the small business end of the market. Co-founder and Chief Operating Officer Cliff Obrecht yesterday said the company was tapping into the global movement towards visual communications. Certainly, it is pushing down that Microsoft-Google route.
Okay, now Technology Council Chair Robin Denholm, who also happens to chair Tesla, yesterday said that the single biggest thing governments can do to encourage car manufacturers to build more EVs is to introduce emission standards.
Ms. Denholm said Australia, being mineral rich, places it in a unique position when it comes to being part of EV supply chains. It should be at the forefront of any move towards renewable energy, but Australia has really struggled to get EVs going due to its lack of emission standards, she said. And that means global manufacturers have focused not on Australia, but other countries who have these standards. Her comments came as China's top diplomat in Canberra floated the idea of the two countries jointly manufacturing electric cars as part of a cooperation on climate change. He said climate change, while a threat, also presented opportunities, particularly since Australia had resources and China had manufacturing. He said talks were underway between the two governments to celebrate 50 years of diplomatic ties between China and Australia, including receptions in both capitals and an exchange of messages between leaders. It's interesting, the diplomats seem to be talking up the relationship while the politicians aren't doing so.
Now, Rio Tinto and China Baowu Steel Group have agreed to a joint venture for the Western Range iron ore project in the Pilbara.
Rio Tinto will make up 54% of the joint venture, and the two between them will invest $2 billion to develop the mine. Western Range has an annual production capacity of 25 million tonnes of iron ore. No idea how you get your head around that one. The investment includes construction of a primary crusher and an 18-kilometre conveyor system linking the site to Rio's Paraburdoo processing plant. Construction is expected to begin next year and take 2 years to complete.
And just quickly, Sean, while we're still in the sector, Australia's richest person, Gina Rinehart, who has made her money in iron ore, has accused the Albanese government of being out of touch with pensioners.
Yes, that's right. Now, Ms. Rinehart said the government's new policy to allow seniors to work more without losing their pensions does not address their cost of living pain. Maybe, but surely it helps just a little bit. Ms. Rinehart said it was very, very sad to see our politicians so removed from the lives of pensioners and veterans, saying too many had to choose between medicines and paying their electricity costs.
It's an interesting position to take on that one, actually, isn't it?
From Australia's richest person, it is.
Now, we mentioned this story yesterday, Sean, but a bit of an update. Toll road group Atlas Arteria went to the market yesterday to raise $3.1 billion to fund its $2 billion purchase of the Chicago Skyway.
Reckon you couldn't get worse timing, asking shareholders and investors for money as the market tumbles. Put on top of that the fact that Atlas's largest shareholder, IFM Investors, doesn't want the deal to go ahead. Quite a task for management, really. Anyway, the placement was expected to get done at $6.30 a share, which is about a 12% discount to just ahead of the announcement.
All right, moving on to overseas news now. And the European Union was set to unveil plans overnight to tax windfall profits from energy companies and impose cuts in electricity usage across the bloc.
European governments have already ploughed hundreds of billions of euros into tax cuts, handouts and subsidies as they attempt to contain the energy crisis that is fueling record inflation and is forcing industries to shut production and pushing up household bills ahead of winter. Now the European Commission will attempt to overlay that with a more coherent bloc-wide response applying across all 27 EU member states. This is according to Reuters. Fossil fuel firms will face a windfall profit levy to claw back what the Commission described in the draft as unexpected profits linked to soaring oil and gas prices. This would raise cash for governments to spend on helping businesses and citizens with their bills. It's an idea which Anthony Albanese has pretty much ruled out, but undoubtedly there is growing pressure around the world to tax energy companies.
Now, we mentioned this one at the top of the show, Sean. Invitations have gone out for the royal funeral on Monday, UK time, with some 500 foreign dignitaries expected to attend.
That's right. As I mentioned earlier, Joe Biden will be there, though former President Donald Trump has not been invited. In fact, the no-invite list is the most interesting. Vladimir Putin didn't get an invite, nor did a representative from Belarus, which has enabled Russia to invade Ukraine through its territory. Myanmar is the other country who hasn't been invited, though a representative from North Korea has, given the diplomatic relations between the two countries. Now, Kim Jong-un is not expected to attend, but 500 foreign dignitaries, including dozens and dozens of national leaders. It will be quite a sight.
Yeah, it certainly will be. Now, yesterday, Sean, as we talked about extensively at the start of the show, was really an incredible day, dominated by what happened on Wall Street. So, to wrap up today's show, for us mere mortals, it's kind of interesting to check in and find out just how much the richest Americans lost in that 8-hour period.
I'd call it jealousy or envy, really. Either way, it's good to see how much wealth was burnt. Amazon founder Jeff Bezos did about $10 billion. Elon Musk, whose wealth is more narrowly spread than Bezos, lost more than $8 billion. According to Bloomberg Billionaires Index, Mark Zuckerberg of Facebook fame and Larry Page and Sergey Brin of Google all lost around $4 billion. Now, I myself checked my super fund last night. Lost about 2%, worth a couple of $1,000. Not quite the same league, I think.
No, it's really not quite the same league. I think that is a first you managing to work yourself into a story about the richest Americans and compare them with your own slightly more humble situation. But
Yeah, exactly.
way to bring us back down to earth for the end of the show. All right. Now, up next is the Fear and Greed Daily interview. We mentioned this at the top of the show with Victor Windia, who is the portfolio manager for the Australian Unity Future of Healthcare Fund.
That's right. And as we mentioned at the top of the show, all about healthcare. If you're an investor and interested in healthcare, listen. That's what I'd say.
Yeah, it's a really good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 15th of September, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.